Hello, traders. Welcome to my channel, AM Trading Tips. In this video, I am going to be sharing one of the easiest TradingView scalping strategy that traders are used in almost all markets, and you can use this one strategy to successfully achieve financial freedom through trading. Scalping is a form of trading, wherein a trader enters and exits multiple trades during a day to make small profits. At the end of the day, these small profits can accumulate to a large number of profit. In fact, I have met a lot of successful scalpers who make more than 6 figures a year. I am not saying that you will become rich overnight by scalping. But if you work hard in scalping, you will likely achieve these abnormal profits. We request you to watch the complete video so that you can get to know better how to trade with this strategy. But before we start, be sure to don't forget to subscribe to my channel, like this video and enable all notifications, so that you don't miss on any of our new videos. And thanks to all the Telegram members, who subscribe my channel, where I share with you my knowledge and other strategies. If you did not subscribe to our Telegram channel, I hope you join now, so join, the link is below this video. The strategy we will learn today is a trend following strategy. This means that we will identify the trend, and consider trading in the direction of a trend. So this is a scalping strategy. We will use 5-minute chart to trade it, but you can also use 1-minute chart to trade it. So this is a trend following strategy, for which we have to first identify the trend, for which we will use an indicator called moving average. Now, moving average is a simple indicator that plots the average price of an asset over a particular period. Different moving averages show different trends. The 200-period moving average shows the long-term trend of the market. Similarly, a 100-period moving average will show the medium-term trend of the market. Finally, a 20-period moving average will show us the short-term trend of the market. That's why we are scalping. We are only concerned with the short-term trend of the market. Therefore, we will use a 9-period exponential moving average, and a 20-period exponential moving average. In an uptrend, the price will remain above both the moving averages, and the 9-period EMA will remain above the 20-period EMA. Another point to note here is that the moving average will slope upwards, and the gap between the moving averages should also increase with each candle. This means that the moving averages should look as if they are moving far away from each other. For this chart, we can confirm that the price is in an uptrend, and therefore we will be looking for only buy setups. In a downtrend, we can see that the price stays below the EMA most of the time, and the 9-period EMA stays below the 20-period EMA. Both the moving averages are sloping downwards, and the gap between the moving averages should also increase with each candle. So we can confirm that the price is in a downtrend, and we will only look for selling opportunities. In a sideways market, we can see that the price moves around the moving average. It does not stay above or below the EMA. We can also see that the EMA remain flat, and there are many crossovers between them, with no clear indication of a trend. So we will stay away in these suits, and we will not enter into any trades. Now let us look at the second indicator that we will be using for our trading, which is the pivot point. Pivot points are simply price levels that are calculated based on the previous day's price action. Here the pivot points look like this. The white line is called the central pivot. This is just the average of the high-low and the previous day's expiry. The 3 lines above the central pivot are called R1, R2, and R3 respectively. Similarly, the 3 lines S1, S2, and S3 below the central pivot are called. At times, pivot points can act as support and resistance levels, hence the price may reverse once it hits these levels. Another way to trade pivot points is by trading breakouts. Whenever the price breaks above a pivot point, it indicates a strong bullish trend. Similarly, when the price breaks below a pivot point, it indicates a bearish move. We will be using pivot points as entry triggers in our strategy. This means that we will make a trade when the price breaks out of the pivot level. We will also use pivot levels as our target. Now that we understand the indicators, let's look at the strategy. So firstly, identify the market trend. We will use moving averages to identify the trend of the asset. Here we can see that the market was in a one-sided trend. The moving average was flat and there was no clear trend direction. Next candle market is up and starts forming blue candles because of this bullish momentum. We see price is above 9-period EMA and 9-period EMA is above 20-period EMA. Also, both these moving averages are sloping upwards. So this is a clear sign of an uptrend. So we will only look for buy trades. Our entry trigger for this strategy would be when the price breakout of a pivot point. It doesn't matter if it's central pivot resistance or not, or any of the support levels. We will treat each pivot level as the same. In this chart, the price breaks above this pivot level, and it becomes our entry trigger. We will place it a buy order above the height of this candle. Risk management is very important when it comes to scalping. Scalping is a game of high rewards with high risk. Hence it is necessary to have a proper risk management plan. In our strategy, we will place our stop loss below the low of the trigger candle. For goals, we will place our targets on the pivot level, above our entry. As you can see, the price gave us profits. Let's look at a sales trade now. Here we can see that the price was moving sideways. But here the price started to go down. Due to this, we see that the moving average is sloping down, and the 9-period EMA stays below the 20-period EMA. As you can see here, we had a sell opportunity. The moving average signals a downtrend, and the price breaks this pivot point with this candle. It was a sales opportunity. So we sell below the low of this candle, and place our stop loss above the high of this candle. We place our targets at the nearest pivot level. And as you can see, we made profits. Well guys, that's enough for today, and I hope that this strategy will be useful for you and that this video will help you to earn more. So if you liked the video and want such more TradingView video, please let me know in the comments. So, see you in the next video, and I wish you a good luck, goodbye and happy trading.